Are you ready for SAP Financial Accounting? Because we'll look at financial accounting processes, transactions, and reports in S/4HANA, it's important to understand the fundamentals covered in my previous course, SAP ERP Essential Training. Generally understanding how SAP S/4HANA works will help you get the most from this course. Basic SAP navigation and reporting skills will ensure you know what's happening on the screen and ensure you get the most out of your time spent. The transactions and reports demonstrated in this course are done in the GUI of SAP S/4HANA 2020. This course has been created so you can watch the actions and clearly understand what's happening in the system. However, if you would like to practice in your own system, I have written about how to get access at the link justin.training/SAP practice system. Everything we do in business relies on accurate financial record keeping. Let's take a look at the capabilities and the importance of financial accounting in SAP S/4HANA. The goal of SAP S/4HANA Financial Accounting is to record all the financial transactions in real time at an organization. The accounting function in this module is the crucial record keeper for our business. It captures all the debits and credits and then accounts for them with appropriate classifications. Next, not only does this module capture all the transactions, it also produces real-time financial reporting. These can be external reports that may be used publicly for legal compliance, or they can be internal reports that can be used by managers to make well-informed business decisions. Finally, the financial accounting module tracks every transaction made in the system. It provides an audit trail from the balance sheet all the way down to the financial transactions at the document level. Now we'll talk about a function in SAP S/4HANA called the Universal Journal. The Universal Journal is a feature that was introduced when SAP ECC moved to SAP S/4HANA. The Universal Journal integrates financial accounting and managerial accounting in a single data model. By doing this, the Universal Journal permanently reconciles all the components of both financial accounting and managerial accounting. This includes the general ledger, asset accounting, controlling, the material ledger, and profitability analysis. This enables this module to be the single source of financial truth at our company. With permanently reconciled financials, the Universal Journal helps our business assess current data and generate reports that are more robust than ever. Now we'll drill down a little further and talk about the general ledger, or GL. The GL provides a complete record of financial transactions at a company. Transactions are recorded in financial subledgers and are reconciled with the general ledger in real time. With the added functionality of the Universal Journal, management accounting transactions also post in the general ledger. All transactions in the system will result in a journal entry. A journal entry is simply the recording of a transaction that shows our company's debit and credit balances. Many journal entries can be triggered by a transaction outside of finance. Examples include customer invoices, materials movements, or supplier payments. Journal entries can also be created manually in general ledger accounting. We'll talk more about manual journal entries later in this course. Critical business functions involved in the general ledger process include posting these different types of journal entries. Next, GL accounting is where all our month and year-end closing activities are performed. Also, this is where we manage bank accounting for all incoming and outgoing payments in our bank account balances. Finally, general ledger accounting provides an up-to-the-minute analysis and reporting of the financial situation at our organization. Next, let's look at the other primary subledgers that reconcile with the general ledger in real time. Accounts payable, accounts receivable, and fixed assets are subledgers that are used at nearly every organization that uses SAP. The GL enables automated posting of subledger items from other modules to reconciliation accounts. As an example, a goods receipt in the materials management module automatically updates in accounts payable. This automation increases efficiency. It also reduces errors as an entry only needs to be made once. We'll dive deeper into each of these key subledgers throughout this course. All of these features work in harmony to power SAP S/4HANA financial accounting. They provide our companies with accurate record keeping and indispensable reporting. A major strength of the SAP system is how all modules are integrated. Data is entered in one part of the system, and through integration, it flows to another part of the system. This ensures accuracy and saves time and effort. There are many integrations for financial accounting in SAP S/4HANA. Now, let's look at two of the most important. First, SAP Financial Accounting, or FI, integrates with the Materials Management, or MM module. We'll talk about this procure-to-pay integration in more detail in a later video. A common example of this integration is when a purchase is made from a supplier. All the data from the purchase order, including supplier information, purchase price, and quantity, transfer directly into finance. Similarly, data from the goods receipts, when the product is received into inventory, and the invoice receipts, when the invoice is received from the supplier, flow indirectly from the MM module to accounts payable. Next, financial accounting integrates with the sales and distribution, or SD module. We'll talk in detail about the order-to-cash process in a later video. For now, an everyday example of this integration is when a sale is made. The data from the sales order, the goods issue, and the outbound delivery with all of the information about the customer, the quantity, and the pricing flows directly to financial accounting and updates accounts receivable. Seamless integrations and real-time reconciliations with other modules makes financial accounting vital to our businesses that are running SAP. The organizational structure and master data are the foundations that SAP databases are built upon, and SAP Financial Accounting is no different. Let's take a look at master data and the financial organizational structure in SAP. Every organization that implements SAP Financial Accounting has to define their organizational structure. This organizational structure must exist before any master data is created or any transactions can be recorded. At the top level of our org structure is client. Clients are self-contained business units within each SAP system. A real-world example would be a production client with a 3-digit number to designate it. For example, 110. The next level down is the company. This is the level where individual financial statements can be created. These financial statements are created according to local law. A company can have multiple company codes. A company code is the smallest unit of external accounting for which a complete self-contained set of accounts can be created. In our example, we've got 2 company codes, one for the US and one for Australia, that both roll up to the same company. Financial reports can be run for each company code to see how well they are performing. Accurate master data and a well-thought-out organizational structure ensure companies comply with local regulations. It's hard to overemphasize how important these components are, as they are also the building blocks that verify precise financial transactions and reporting that truly capture what is happening on the finance side of a business. For most end users, the organizational structure will be set up for you, and you'll quickly become familiar with the client, company, and company codes that you're working in. Master data refers to all the information that deals with people, places, or objects in the system and remains mostly unchanged. Without correct master data, accurate transactions cannot occur. In SAP Financial Accounting, there are many important master data elements. First are general ledger accounts, which record financial transactions and track account balances. All these general ledger accounts are assigned to the chart of accounts. The chart of accounts is a numbered list used to organize all the accounts in the general ledger. Next, a company in SAP is the smallest unit where financial statements can be created and comply with legal regulations. And company code is the smallest organizational unit where a complete, self-contained set of accounts can be reported on. As we saw on the example in our last slide, there can be multiple company codes assigned to one company. In SAP, profit centers act like their own independent companies. Profit centers are useful because they provide a detailed balance sheet and show profitability of one operation, like a consulting service. Cost centers are defined departments that directly support one of these profit centers. Cost centers add to the cost and only indirectly add to the profit of the organization. A common example at many companies would be the marketing department. Finally, reconciliation accounts are general ledger accounts where transactions in the subledgers like accounts payable or accounts receivable are automatically updated. With thoughtfully configured financial accounting org structure and master data elements, we're able to get the most functionality and accuracy in our transactions and in our reporting functions. As we stated earlier, a company code is the smallest organizational unit where a complete, self-contained set of accounts can be reported on. And all financial postings in SAP require a company code. To see all the company codes available in our test system, we'll enter transaction code OBY6 and press Enter. This is a list of all 71 company codes we have available in our practice system. In our first column, each company code is designated by 4 numbers or letters. Organizations usually define a numbering convention based on geography. For example, all of the company codes with locations in Australia could start with AU. We then see the company name, the city where it's located, the country, the currency, and the default language. Multiple company codes in this list could be rolled up together to a single company. A company is the smallest unit where financial statements can be created and comply with commercial legal regulations. Let's drill down and see more information about a specific company code. We'll double-click on company code 1710. Now it should be noted that most end users will never have access to change anything on this screen. These master data settings are decided when the system is being configured and will usually remain constant. In the accounting organization area, we have fields related to how this company code is organized. Let's click the search box on the chart of accounts field. We'll scroll down. We see that we're in the chart of accounts with code YCOA called Standard Chart of Accounts. This is a default option when creating a company code. We'll close our search box. Below we have the checkbox next to company code is productive. When it's checked to active, it means the transactional data and master data cannot be deleted from the system as it's actually being used. To the right, we have the fiscal year variant field. Again, let's click on the search button to see what K4 means. We see that the code K4 means this company code's fiscal year is set to a normal calendar year with 4 special periods. We'll scroll down. The bottom section of the screen shows processing parameters for company code 1710. These fields include accounting processing rules for exchange rates and tax settings, as well as our posting period variance. Once all these fields are configured, a company code is ready to be used. Having company code set up properly is crucial to enable accurate financial postings and to link financial data from other modules within SAP. The chart of accounts is a list of accounts in the general ledger. There must be a chart of accounts assigned to each company code that is created in the system. This chart of accounts is used to record financial transactions and to see the balances in the accounts. Let's take a look at a chart of accounts in our test system. We'll enter transaction code S_ALR_8701233. We want to see the chart of accounts that is available for company code 1710. So we'll enter 1710 in the company code field and press Execute. Our results show a list of every GL account for company code 1710. It's quite a list. All GL accounts in company code 1710 belong to the chart of accounts called YCOA, as seen in the first column. Bank accounts, like our Bank 1 Bank main account, are set up for our use in the general ledger. We see the GL account number begins with 1. It's very typical when setting up a chart of accounts at an organization to have all asset accounts to begin with the number 1. Let's look at a liability account. We'll press the Find icon and search for a GL account beginning 211. And press Find. We'll choose the Payables Domestic account. Again, it's typical for organizations to set up all liabilities accounts in the chart of accounts to begin with the number 2. That is the case here, where all of these accounts beginning with 2 are liability accounts. Let's drill down into one of these GL accounts listed in the chart of accounts. To do that, we'll enter /n to open a new transaction, then the T code FSP0. And press Enter. We can see that the system has auto-populated our Payables Domestic account in the standard chart of accounts, so we'll press Continue. We can see this is a balance sheet account, which makes sense because the accounts payables should be included on our balance sheet. Each general ledger account is assigned to an account group when its master record is created. In this case, the account group is a reconciliation account from accounts payable or accounts receivable. Different GL accounts in a single account group are always related by their use. They'll require the same data when making journal entries, and, as noted above, they will have account numbers within a specific range to show that they are grouped by account type. All of the general ledger accounts, like Payables Domestic here, grouped together, make up the chart of accounts for this company code. The chart of accounts is a key piece of financial accounting master data. General ledger accounts are used to record financial transactions and to view the balances in the accounts. And these GL accounts combined make up our chart of accounts. Let's explore reconciliation accounts in SAP. Reconciliation accounts are the vehicle that links subledger accounts like accounts payable, accounts receivable, and fixed asset accounts back to the general ledger. Every subledger account has to link back to a reconciliation account. For example, when there's a posting to the accounts payable subledger account, the balance in the associated reconciliation account in the general ledger gets updated automatically. Now, let's look at a reconciliation account in our test system. To do so, we'll enter transaction code FS00 and press Enter. This brings us to the Edit GL Account Centrally screen. In the GL Account field, we'll enter 211-00000, which is the account number for our payables domestic account. And in company code, we'll enter 1710. Now we'll press Continue. We now have all the information about this reconciliation account populated. We can see this is a balance sheet account, as accounts payable should be included on the balance sheet. We can see the account group is set to reconciliation group, AP/AR. The account group field is used to group similar accounts into one single group. This account group would put all accounts payable and accounts receivable into the same group. The account group field also establishes the number range for the account number. Now let's click on the Control Data tab. Let's look at the reconciliation account for account type field. An entry in this field is what actually makes the GL account a reconciliation account. The reconciliation account ensures the integration of a subledger account into the general ledger. We see that this is marked to reconcile with vendor account types. This is correct because accounts payable should reconcile with vendor accounts, as that's who needs to have their accounts paid. Let's talk through an example of this process. First, a vendor invoice is received by accounts payable. Next, this accounts payable data would be posted in the vendor subledger account. At the same time, a vendor invoice payment document is created. Finally, because of the designations we've seen on these screens, this payment automatically posts in this general ledger reconciliation account. This allows us to run real-time financial reports and show up-to-the-minute information in balance sheets and income statements directly from the general ledger. As noted before, the details of the transaction stay at the subledger account level, but the balances are updated in real time in the general ledger, all thanks to reconciliation accounts. Accurate recording of financial transactions are required by every business to ensure they comply with regulations and can report taxes properly. The general ledger is the full record of financial transactions at our companies. Let's look now at the typical flow for general ledger accounting in SAP. Some companies using SAP can have very complex accounting processes, but at a high level, general ledger accounting contains these key elements. This flow is often referred to as the record to report process. The general ledger process starts by maintaining master data in the chart of accounts and in company codes. General ledger accounts can be added, changed, blocked, unblocked, or flagged to be deleted. With all necessary general ledger accounts in good order, the next step in the process is to record pending journal entries. These pending entries can be for things like expenses, invoices, or intercompany transactions. Next, journal entries are reviewed and approved. Items are cleared when an offset value is posted so that the resulting balance of the two items is zero. Some open items can be automatically cleared when SAP's clearing program is run, and this is usually done on a weekly basis. Other items need to be manually reviewed, especially when an entry is greater than a predetermined amount. Next, adjustments are made and recorded as a result of things like accruals, advance payments, or bad debt. Once all adjustments are completed, the GL accounting period is closed. Finally, after closing the fiscal period, both external and high-level management reporting is executed. General reporting and financial inquiries are conducted on a daily basis throughout each phase of this process. Organizations with intricate business models may require slight alterations, but in general, these are the key activities in the record to report process. Posting is the process of recording credits and debits, and our general ledger is the full record of financial transactions at the business. Postings in the general ledger keep our financial records up to date and enable the real-time financial reporting that is so useful to management and other stakeholders. Postings can come from our subledger accounts, or they can be made directly in the general ledger. Now, let's look deeper at the sources and impacts of postings in the general ledger. There are three typical sources of postings in the general ledger. Automatic postings come from subledgers like accounts payable, accounts receivable, fixed asset accounting, and the controlling module. These automatic postings record things like costs, revenues, and asset depreciations. Another source of posting in the GL are manual postings. Manual postings are made directly in the SAP General Ledger, and they are one-off transactions. For example, a manual posting could record the one-time movement of cash from a bank account into a petty cash account. When created, these manual postings are often called journal vouchers. Finally, there are uploaded postings. Postings can be uploaded via Excel or from an interfacing program. An example of an uploaded posting would be a bulk upload of a payroll run. When a posting occurs in a subledger, an accounting document is created. The document is the record generated in SAP every time a transaction is executed. The document type is a way to categorize the transactions, and this allows for effective reporting downstream. These postings in a subledger are automatically posted in the general ledger, and clearing documents are created. Let's review an example for each of the three major FI subledgers. First, in accounts receivable, a customer makes a bill payment. A document with type DZ is created. In the general ledger, the payment is posted and a GL clearing document is created. Similarly, in accounts payable, a payment is made on an invoice to a supplier. A document with type ZP is created. Again, in the general ledger, the payment is posted and a GL clearing document is created. Finally, in asset accounting, an asset is depreciated. A document with type AA is created. The depreciation is posted in the general ledger and another clearing document is created. We've looked at the sources of GL postings and the specifics of our subledger postings. This concept is crucial to understanding SAP financials, as general ledger postings are the transactions that keep the financial records both accurate and current. We're now going to create a manual journal entry. Manual journal entries are one-time transactions that are made directly in the SAP General Ledger. Manual postings are sometimes called journal vouchers. Because these accounting documents don't have a subledger entry like business partner or asset, they get created directly in the general ledger. In our scenario, let's assume one of our employees has quit and we need to pay them outside of a payroll run. We want to document the movement of $1,000 from our bank into our salary account. To create our manual journal entry, we'll enter transaction code FB50 and press Enter. The first important field is document date. This is the date the original document was issued. For our purposes, we'll use today's date. Next, the posting date is the effective date of posting. It is defaulted for today, and we'll leave it, but this field is editable if we have a different effective date. The company code is the legal entity where this journal entry is being recorded. For us, it's defaulted to 1710 because that's the company code we've been working on in this system. Now we can change this easily by pressing the company code button on the application toolbar and then entering a different company code. We have our required header data complete for this journal entry, and we'll move down to the line item section. This transaction enables posting multiple line items on one screen. For our first line item, we need the GL account for prepayment of salary and wages. We'll click the Match Code button and search. In the GL long text field, we'll search for asterisk prepayments asterisk and click Start Search. We see our GL account starting 152 and we'll double click that. Next we go to the third column, which is D/C for debits or credits. We want to increase an asset, in this case the wages prepayment account, so we'll choose debit. The fourth column is amount in document currency. Because we want to show 1,000 moves into wage prepayment account, we'll enter 1,000 here. We now press Enter to populate the rest of the line. Debit and credit entries have to balance for us to be able to post this document. When we hover over the red light in the account information section, it shows us the balance is not equal to 0. Now let's balance our entry. For our second line item, we'll search for the bank we want to credit. We click the Match Code button to search again. And click Start Search. We'll choose Bank to Bank Main Account. In the Debit/Credit column, we want to decrease an asset, so we'll choose Credit. We moved $1,000, so we'll enter 1,000 in our amount in document currency field. Our credit line item requires one more field. That's the value date. This is the day the bank balance is affected. Again, we'll choose today. Now we'll press Enter to populate this line item. Back in our amount information area, our stoplight has turned green. When we hover over it, it says balance equals 0. If we're sure all this information is correct, we can click Post in the bottom right. In case we're not quite sure this posting logic works, we can click the Simulate button. This shows our document overview screen with our header and line item information. If our logic was not correct, we would receive an error message letting us know our issue. We can now post this document, and we'll click the Post button. We receive a success message from the system that our journal entry was assigned a document number and has successfully posted in company code 1710. This one-time transaction has now been posted directly in the general ledger using our manual journal entry. Sometimes we need to reference general ledger documents that are already in the system. Perhaps we want to view a GL document that our colleague posted to get more details. To do this, we'll enter transaction code FB03. In the Keys for Entry View area, we need to enter our document number, which is 1, 7 zeros, and then 7. If we didn't know the specific document number, we could search for it by pressing the Document List button above. Next, we'll enter our company code, which is 1710. Then we'll enter our fiscal year, which is 2022. With our Keys for Entry View fields complete, we can click Continue. This takes us to the Display Document screen for this general ledger document. The Data Entry View area has information that we entered on the previous screen, like document number, company code, and fiscal year, along with document date, posting date, and period. Often, we'll want to see what document type this document is. To see the document type, we can click on the hat icon to display our document header. We see in the document type field, we have document type set as SA, which is the code for GL account document. This document type identifies the type of transaction. For example, the document could be a vendor invoice, a customer invoice, or, like in this example, a general ledger document. The document type assigns the document number. Okay, we'll cancel out of the document header screen. Let's look at the line items for this general ledger posting. On line item 1, we have 40 in the posting key column. 40 is the posting key for debit entry. The posting is made to the prepayment salary wages account for $1,000 US. On line item 2, we have 50, which is the posting key for credit entry. This credit is made to the Bank 2 main account for $1,000. Sometimes we need to take a deeper look at the financial transactions that have been made in our system. Displaying a document using transaction code FB03 helps us do exactly that. Now we're going to park a general ledger document in SAP. The park function in SAP stores an accounting document without posting it to the system. By parking a document, it's not yet going to impact our general ledger balances. There are many reasons to park a document instead of just directly posting it. In our scenario, let's imagine that we're an accounting clerk, and the way our security role in SAP has been configured, we don't have authorization to post documents with a value over $50,000. The general ledger document we're entering is for payroll bonus expenses, and it's for $75,000. To park a GL document, we enter transaction code FV50 and press enter. We're taken into our Park GL account document transaction. The first important field is document date. This is the date the original document was issued. For our purposes, we'll use today's date. Next, the posting date is the effective date of posting. It is defaulted for today, and in our situation, we'll assume we will get managerial approval later today. Next, the document header text field is an optional field, but it can be a useful reference for anyone else viewing this document. We'll type 2022 payroll bonus. Our company code is defaulted to the company code we've been working in, 1710. If we need, we can change our company code by pressing the company code button at the top of the screen. Our header data is now complete. Let's start entering our line item data. In the first line, we want to move money into the payroll bonus account. The number for that account is 610-20000. To increase money in this account, we'll choose debit from the drop-down. Next is the amount in document currency. The amount we want to move is $75,000. Now we'll press enter. Our stoplight has turned red, and when we hover over it, it says balance not equal to 0. So in the next line, we need to balance our amounts. We'll choose the account we want to credit. The account is our Bank 2 main account, and the number for this account is 11002000. Now we want to choose credit because we're decreasing an asset account. In our amount in document currency, we'll again enter 75,000. And now we'll press enter. Our stoplight has turned green, and when we hover over it, it says our balance equals 0. This document is ready to be parked, so we click the Save Park Document button. Our status bar shows the new document number at company code 1710 has been parked. Again, when we park a document, no general ledger account balances are impacted. Now, a manager can come in and confirm the information in this document, and with their credentials, they can post it. Now we're going to post a parked general ledger document in SAP. By posting this document, our general ledger balances will be debited and credited. In our scenario, we'll imagine that we are an accounting manager. Due to SAP security role configuration at our company, the accounting clerk that created and parked this document did not have authorization to post documents with a value over $50,000. Let's review the document they created and post it by entering transaction code FBV0 and pressing Enter. Our system has auto-populated our company code with 1710 and the document number we should be working on. In this example, we already know the park document number we want to post. If we didn't, we could press the Document List button, and it would bring us to an area to search for all park documents. Now we'll enter fiscal year of 2022 and press Continue. This brings up our park document with all the header information and the 2 line items below. Our header information looks okay. The general ledger document we're approving and posting is for $75,000. We're debiting the payroll bonus account and crediting the Bank 2 main account. Everything looks okay so far, but our stoplight is showing a yellow warning light. When we hover over it, it says Balance Not Yet Determined. Let's check everything before we post this. To do so, we'll press the Simulate button. We get a red error message that says our value date, which is a required field, was not entered. We need to enter it before we can post this document. We'll click the Match Code button and choose today's date. Again, we'll press Enter. This brings us to our document overview screen, showing that our simulation was successful. This ensures that all required fields have been filled in and that our line items balance. We can now post this document by pressing the Post button. This brings up an information pop-up saying that our document was posted in company code 1710. Going back to our scenario, the accounting clerk who created and parked this document did not have the right credentials to post this document. As an accounting manager, we do have access to post high-value documents, and as our success message shows, we have successfully posted this previously parked general ledger document. Reporting in the general ledger in SAP is extremely versatile. There are many reports that can show us the exact financial information we need to analyze. Let's take a look at the report called GL Account Line Item Display. This report serves as an excellent tool to validate account balances and transaction details. To get there, we enter transaction code FAGLL03 and press Enter. We want to run this report for our Bank 2 main account. The GL account number for this is 1100200 in company code 1710. We'll scroll down to our line item selection area. We want to run this for all items, so we'll click the radio button next to all items. Now we'll press Execute. This is a really useful report because we can run it for all the accounts across many company codes, or we can be very specific and run it for one GL account with line items open at a key date. Here we are looking at all open line items for the Bank 2 main account. Let's examine the line item for the document ending in 08. The first column is marked as Status, and we see a green check mark. This green check mark means that this document has been posted. Moving right to the fourth column, we see the document type SA, meaning this is a general ledger document. The document date is 10/31/2022, and in the PK or posting key column, we see the key is marked as 50. That signifies that this line item is a credit entry, and the credit was for $75,000 US. This is an extremely functional report because we can actually drill down to the document we are examining as a line item. To do this, we click anywhere on the line. Then we can click Display Document to display it using the eyeglass icon, or Change Document if we want to change specific fields using the pencil icon. This report also shows us the total account balance. In this case, it's negative $73,898.96. This is only one report in the SAP GL. To see many of the available GL reports, we'll head back to the SAP Easy Access screen. To do this, we'll press Exit and Exit again. Back at the SAP Easy Access screen, we'll use the menu tree. We'll expand the Accounting folder. Next, we'll expand General Ledger. The last report we looked at is found by expanding Account. For even more reporting options, we expand Information System and General Ledger Reports. From here, each of these folders contain many more GL reports. Some are broken down as country-specific, but there are many options depending on what your GL reporting needs may look like. For an example, we'll expand Account Balances. The many robust GL reports available help keep us on top of the real-time financial situation at our organization. A major subledger of the general ledger in SAP Financials is Accounts Payable. An account payable is a liability owed to either an external business partner, like a supplier, or to an internal stakeholder. The Accounts Payable subledger is used primarily for managing our supplier accounts and issuing payments for goods and services that we've received from those suppliers. Let's see how Accounts Payable fits into common business processes in SAP S/4HANA. We're now going to review what is often referred to as the procure-to-pay process in SAP. Procure-to-pay captures the buying, receiving, and payments of goods or services from an external vendor. This whole process is triggered by a need from the business. Let's say, to continue manufacturing microchips, we need to purchase a raw material like copper. To initiate the process, a buyer at a company creates a purchase requisition for 100 flat sheets of copper. The buyer's manager reviews the purchase requisition, and they agree that yes, the business needs 100 sheets of copper to continue production. So the purchase requisition is approved. Next, let's assume we have a supplier in the system already, and every time we order copper, we order from this preferred supplier because a price has been pre-negotiated. A purchase order with 100 sheets of copper from our preferred supplier with our agreed upon price is created and sent off to them. Then, a week later, our 100 sheets of copper arrive in our warehouse. At this point, a goods receipt confirming the order is correct and has been received into inventory is generated in the system. Next, because we now have the copper in our possession, we can verify and then process the invoice. Finally, we can pay our supplier. Let's say we've negotiated net 30 payment terms. We have 30 days from receipt to pay the supplier. Payments commonly occur through electronic transfer, check, or wire. These payments can also occur automatically when payment programs are set up. These last two steps of the procure-to-pay process, where an invoice document is created and the supplier is paid for goods or services received, are usually handled by the Accounts Payable team. Throughout this entire process, we can run reports. For example, we can run specific reports by individual supplier or by invoice due dates. All postings that are made in Accounts Payable are also updated in the General Ledger in real time. So reports can be run to keep track of all items, whether they are open or closed. Like most modules and submodules in SAP, Accounts Payable is tightly integrated with other areas. As outlined in the procure-to-pay process, purchasing in the Materials Management module handles purchase requisitions, requests for quotations, purchase orders, goods receipts, and inventory and warehouse management. Information from these transactions flows automatically into Accounts Payable. For example, a goods receipt in the purchasing area automatically updates the supplier's account balance in Accounts Payable. Accounts Payable also integrates with the general ledger via reconciliation accounts. When a supplier is paid and the payment document is created, this document is automatically posted in the general ledger reconciliation account, and a general ledger clearing document is created. Through tight integrations, the accounts payable subledger is a powerful tool for issuing payments for goods and services to the appropriate suppliers. Accounts payable relies on important master data called business partners. Business partners have many functions. In this area, we're interested in setting up business partners as suppliers. Having suppliers correctly configured in our system enables the procure-to-pay process. First, we can make purchases from the suppliers. Later, we can issue outgoing payments to these suppliers for goods or services they provided. Let's walk through creating a supplier now. In S/4HANA, SAP consolidated all business partner creation and maintenance under the transaction code BP. So we'll enter BP and press Enter. Because we're creating an organization, we'll click Create Organization. The system prompts us with a message in the status bar to choose the business partner role. And this is extremely important, as this selection determines what fields we'll be able to edit. In our Create in BP role, we'll click the drop-down and choose Supplier Financial Accounting. We're prompted with an error that asks us if we want to change to another BP role in Create mode. We do, so we'll click Create. By default, there are only 6 fields that are required fields, needed before we can save and create the supplier. We'll fill them in now. First is the supplier name. We'll type Locus Sciences. Next, we'll scroll down and we'll enter our postal code, 92101, our city, San Diego, our country, US, our region, CA for California. We'll scroll down again, and under language, we'll choose English. Of course, we can also fill in any of the additional fields that may be helpful. Now, you'll notice we have tabs going across the screen, each with fields that may or may not be important to your organization. Because we are in the Supplier Financial Accounting Business Partner role, we have vendor general data, vendor tax data, and vendor texts fields. The Vendor General Data tab allows us to add more information that is specific to the supplier, like account group. The Vendor Tax Data tab allows us to add tax information, and the Vendor Text fields is where we could make a specific note about this supplier. We won't change any of these fields right now, but we will go ahead and save the supplier by clicking Save in the bottom right of the screen. We have an information message at the bottom showing us that this supplier has been created and has been assigned a number, 53. But we're not done. To be able to use this supplier in the accounts payable process, we have to extend our supplier to a company code. To do this, we'll click the Company Code button. We want to extend this supplier to company code 1710. We'll type that in and press Enter. Now we can also update the reconciliation account field below that has become active. Let's click the match code and see our available reconciliation accounts. We have 18 options. This is a domestic supplier, so we'll choose the Payables Domestic Reconciliation account. Now we'll click Save. The system notifies us that the changes have been saved. From an accounts payable perspective, this supplier is set up. But there is another business partner role that needs to be set up so we can actually make a purchase from this supplier. We'll click the drop-down in the Change in BP role, and we'll choose Supplier. We'll now click the Purchasing button at the top of the screen. Now we have to assign the supplier to a purchasing organization. We want to extend the supplier to Purchasing Organization 1710 and press Enter. We'll also set our order currency as USD for US dollar. And again, we'll save. We can see that the change in BP role changed from supplier to supplier with maintained in parentheses, as this business partner role has now been defined and is ready to be used in our procure to pay process. Like every part of SAP, accounts payable relies on master data. Creating suppliers with accurate data and extending them to the correct organizations will ensure our suppliers get paid on time. Oftentimes, in the accounts payable process, some of our supplier information will change. Or, as time goes along, we'll simply have more information about who we're doing business with. When this happens, we need to update our business partner master data. In our example, let's look at adding bank details so we can pay our supplier. We'll also update our payment terms. We would need to do this when a buyer from our company has negotiated specific payment terms with a supplier. To make these changes, we'll enter the Maintain Business Partner transaction with T-code BP. Once we're in our transaction, we need to find the business partner we want to update. To do this, we'll find our business partner by number. We'll enter business partner number 53 and press Start. We can see our supplier, Locus Sciences, below. We'll double-click. In the Change in BP role field, we want to change financial information about the supplier. So from the drop-down, we'll select Supplier Financial Accounting. This supplier has provided us with their bank information, so we can make a wire payment, and we want to add that information into the master record. To do that, we'll click the Payment Transactions tab. The first field we'll enter is Country. We'll enter US. In the Bank Key field, we'll search. In Bank Name, we'll search for Bank of America. We can see that our bank key has been auto-filled for us. It's important to note that the bank key field here is commonly known as a routing number. Next, we'll enter our bank account number. This will be 8 digits. Next, we'll enter our control key. We'll enter 01 for a checking account. It's important to note that the IBAN fields can be used to set up an international bank. We're now ready to save, so we'll click Save. Perfect. Our supplier bank information has now been saved. Now, we also want to change the payment terms for this vendor. To do this, we'll click Company Code. Now we'll go to the Vendor Payment Transactions tab. Let's assume one of our buyers has negotiated net 60 payment terms with our supplier. A net 60 payment term means that we have 60 days from the date of invoice to pay for that order. We'll click our Match Code button, and we'll scroll down. We'll now choose NT60 within 60 days due net. We're now ready to save. Our updated payment terms with this supplier have now been saved. Our supplier information is always in flux. It's important to keep the business partner master data current to ensure our accounts payable transactions are accurate. We now want to create an invoice from an existing purchase order. In our scenario, a purchase order has been created and released in the system. The order, a raw material, has been physically received from the supplier. A goods receipt document has also been created in the system. So now, we're ready to create an invoice so we can pay the supplier for their products or service. To do this, we enter transaction code MIRO and press Enter. This brings us to our Enter Incoming Invoice transaction. As we can see in our transaction field, we already have invoice populated. That's what we're creating, so no changes are needed here. Next, we'll move down into the basic data area for this invoice. In the invoice date field, we enter the date the invoice was created. We'll select the Match Code button and assume that this invoice was created today, so we'll enter today. The next field is the reference field. This is the supplier's invoice number. This is an optional field, but we want to enter this data correctly in case we need to search in the future by the supplier's invoice number. In our example, we'll enter invoice 1217. The posting date field is auto-populated with today's date. This is editable, but because we want the invoice to post today, we will leave it as the default. Now, we're not finished in the header. We need to enter the amount this invoice is for. However, let's skip ahead to enter the purchase order we're referencing first to ensure our payment amount matches up with the purchase order amount. We'll now move down to the PO reference area. In the dropdown in the PO reference area, the field is set to purchase order/scheduling agreement. This is what we need, so we'll leave it as is. Next, we need to enter the purchase order number. We'll enter 4500000071 and press enter. Now we see that all the line item information from this purchase order has been populated. The cost was $130 for 100 pieces of something called a raw 20 PD. When we entered the purchase order, all of our vendor information was also populated. This vendor is called Top Notch Supply. We can also see that this vendor has their bank information set up with an account number and key. Now, when we look at the top of the screen, we see the red light, and when we hover over it, it says incorrect. That's because our balance is negative $130 US. Now, let's go back to our amount field and enter 130 and press enter. Looking again at the stoplight, it's now green. And when we hover over it, it says posted, can be posted. Also, our balance is 0. Perfect. We can now post this invoice. The status bar shows us that the document, in this case, the invoice, has been successfully created and ends with numbers 103. We have now created the invoice to pay our supplier for our purchase order. We're now going to create an invoice without a purchase order to reference. This is sometimes referred to as creating a direct invoice. These invoices are created directly in our accounts payable subledger. To do this, we enter transaction code FB60. In our scenario, we owe a supplier, but in this case, there isn't a purchase order or a goods receipt in the system. Let's assume we have a physical invoice in hand, and we're going to create a direct invoice in the system. We can see our transaction field is already populated with invoice, so there's nothing to change here. Next, we'll move down into the basic data area for this invoice. In this scenario, we have to manually enter the vendor's business partner number. We'll enter 173000001. In the invoice date field, we enter the date the invoice was created. We'll select the Match Code button and assume that this invoice was created today, so we'll select today's date. The next field is the reference field. This is the supplier's invoice number. We want to enter this data correctly in case we need to search in the future by the supplier's invoice number. As an example, we'll enter invoice 88. The posting date field is auto-populated with today's date, This is editable, but because we want the invoice to post today, we'll leave it as the default. We can now press enter so the system will read our information. When we entered the vendor number, all of the vendor information was also populated. This vendor is called Top Notch Supply. All of this vendor's bank account information is present in the system already, so we can proceed. Now, we're not finished in the header. We need to enter the amount this invoice is for. Let's assume that our company owes this vendor $1,000. So we'll enter 1,000 in the amount field and press enter. Looking at the top right area of the screen, we see the balance field with negative 1,000 in it. Right next to that, we have a red warning light. When we hover over it, it says balance not equal to 0. The system is warning us we're trying to pay the supplier $1,000, but we haven't yet said which general ledger account we want to pay this money from. To fix this issue, let's go to the first line item. The first field is GL account number. We'll enter account number 2172-00000 and press enter. In the short text field, we can see the name of this account is Other Payables, NRA. The system has defaulted for the GL account to be debited. This is correct because we have credited the vendor $1,000 in the amount field above, and these debits and credits must balance. We now enter $1,000 in the amount and document currency field and press enter. Again, looking at the top right area of the screen, we see the balance field, but now the balance is 0. Right next to that, we now have a green light. When we hover over it, it says balance equals 0. The system is telling us that this invoice is now correct, and we can post it by going down to the status bar and pressing the Post button. The status bar shows us that the invoice we just created was successfully posted in company code 1710 and assigned a number from the system. We've successfully created a direct invoice, which means we've created an invoice without a purchase order to reference in our system. As in all areas of SAP financials, the standard reports in the accounts payable area are very robust. They are used to make AP account inquiries. They can be also used for period end account analysis and vendor account reporting, amongst other things. Let's look first at the list of vendor line items report. To do this, we'll enter transaction code S_ALR_870-12103. This brings us to the list of vendor line item selection criteria screen. We're going to run this report for one specific vendor, vendor number 173-00001. We'll do this in company code 1710. We want to run this report for all items, and we can see that our All Items radio button has been checked. We can now execute this report. This brings up all our line items for our supplier in this company code. We want to make our report easier to work with, so we'll go to Settings, Columns, Optimize With. All the data in the orange rows is information about this specific supplier, like name and address. We see that this supplier is Top Notch Supply. Below, we can see the line items for this vendor. The first column, called Assignment, comes from the reference field. If there's a vendor invoice number that was entered in the reference field, then it shows up here. The second column is the posting date, and that's the date that each of these line items were posted on. The fourth and fifth columns are the document number and the document date columns, respectively. Looking across to the FC amount column, This is our amount in US dollars. This column tells us the amount of each line item. Now let's look down at the bottom of the report. When we look at the bottom row of this report, we can see that for this supplier, we have a total balance from all of our invoices of negative $25,078 US dollars. This is only one report in the accounts payable area. To see many of the available AP reports, we'll head back to the SAP Easy Access screen. To do this, we'll press Exit and Exit again. Back at the SAP Easy Access screen, we'll navigate using the menu tree. First, we'll expand the Accounting folder. Next, we'll expand Financial Accounting. Now we'll expand Accounts Payable. The bulk of accounts payable reports are found by expanding the Information System folder, and then the Reports for Accounts Payable Accounting folder. Each one of these folders contains different accounts payable reports. First, we expand Vendor Balances. We see 6 reports related specifically to each of the vendor balances. The Vendor Items folder has 7 reports related to that topic. The Master Data folder has reports directly related to the business partners that have been set up as vendors and suppliers. And finally, the Payment Transaction folder has 4 reports that look at actual payments like cash checks. Out-of-the-box SAP functionality provides a ton of standard finance reports. These report results provide a wide range of insights into your organization's accounts payable data. Revenue is the lifeblood of any business. The accounts receivable subledger ensures that our businesses are efficiently receiving the money owed from customers. Accounts receivable is also used for managing our customer accounts and making sure they have the appropriate amount of credit. Additionally, it's where dunning and collections management take place in the system. Let's take a look at a typical accounts receivable process in SAP S/4HANA. Now let's explore what is often referred to as the order-to-cash process. This process outlines the steps from a customer's order all the way to the cash being applied to a customer's account. The order-to-cash process is triggered when a customer wants to buy a company's products or services. The customer can either request a quotation and then make an order, or they can submit a purchase order directly when a quotation isn't required. At many organizations, these steps are handled by the sales team. An approved order results in the creation of a sales order in SAP. Next, if the company is selling a service, the service is provided. Or if a product is being sold, the product is manufactured or located in available inventory. Then the product is picked from inventory, packed appropriately, and shipped off to the customer. Then, a goods issue is created, which reduces stock in the system. Now we create the invoice and submit it to the customer. Finally, after the customer has received their order and invoice, the customer submits payment via check, ACH, or wire. Payment will be made based on agreed upon payment terms. The payment is applied to the correct customer accounts and receivable invoices. In SAP, this is referred to as cash application. These last 2 steps are normally handled by the accounts receivable department. All postings made in accounts receivable are also updated in the general ledger in real time. Reports can be run to provide current data to see any information throughout the order-to-cash process. Accounts receivable integrates tightly with many other parts of SAP. We want to highlight 2 crucial areas. First is the Sales and Distribution module. As we saw at the initiation of the order-to-cash process, the sales and distribution module is where sales orders are created and products and services are delivered to our customers. Tight integration between accounts receivable and sales and distribution ensures that accurate data from these sales flows into receivables and customers are billed the correct amount with the correct payment terms associated. Accounts receivable also integrates closely with the general ledger. All postings in accounts receivable are also recorded directly in the general ledger through reconciliation accounts. This integration is what powers the robust financial reporting that gives us a real-time view at the financial health of our business. Through tight integrations, accounts receivable is a powerful tool for managing our customer accounts and receiving payment for our sales. Accounts receivable ensures our businesses have the revenue required to keep operating efficiently. We need accurate accounts receivable master data set up in our system. Customer records are crucial for the entire sales process, from purchase requisitions to sales agreements to the cash application from payments for customer invoices. We'll now step through creating a customer in SAP. We'll start by entering transaction code BP. We want to create a new customer, so we'll click Create Organization. The next field is extremely important, as this selection determines what information about our customer we can edit. In the Create in BP role dropdown, we'll select Customer Financial Accounting. We're prompted with an error to change to another BP role in Create mode. We do want to change the role, so we'll click Create. There are only 6 required fields we need to enter before we can save and create this customer. Let's fill them in now. First is name. We'll enter Lion Supply. Now we'll scroll down, and under street address, for postal code, we'll enter 92107, San Diego, country, US, region, CA for California. And we'll scroll down again, and under language, we'll enter English. We can fill in any of the additional fields that may be helpful to us. Notice that we have many tabs with fields that may or may not be important for your organization. We'll click on the 3 dots to show all our tabs. Because we are in the Customer Financial Accounting role, we also have Customer General Data, Customer Tax Data, Customer Additional Data, Customer Unloading Points, and Customer Text fields available to edit. The Customer General Data and Additional Data tabs allow us to add more information specific to this customer. The Customer Tax Data allows us to add tax information, and the Customer Unloading Points deals with shipping delivery information. Finally, the Customer Text tab is where we can make specific free-form notes about this customer, like special billing instructions. We can now save our customer. We now have an information message at the bottom in the status bar showing us that this customer has been created and has been assigned number 54. We're not quite done yet. To be able to use this customer in the accounts receivable process, we have to extend it to a company code. To do this, we'll click Company Code. We want to extend this customer to company code 1710. Now we'll press Enter. The system prompts us to add the reconciliation account. We'll enter the receivables domestic account, which is 121,000,000. We'll also update our customer payment transactions. We'll add our payment terms for this customer. Let's say that we've extended them net 30 payment terms. We'll click the match code, scroll down, and choose NT30 within 30 days due net. Now we can save. Now, our customer financial accounting business partner role is complete. We can use this customer from an accounts receivable basis. There is another business partner role that needs to be set up so that we can actually make a sale to this customer. We'll click the dropdown in the Change in BP role and choose Customer. Now, to make a sale to this customer, we must extend them to a sales organization. To do this, we'll click Sales and Distribution. Now we'll enter our sales org 1710. We'll enter our distribution channel, which is 10, and our division is auto-populated for us. We can now save our customer business partner role. By creating these two business partner roles and extending them to the correct company code and sales area, we're able to now sell to and bill this customer. Having strong customer master data enables the order-to-cash process and is crucial for accounts receivable at every company using SAP. Customer information can change often. One attribute that changes frequently and impacts the sales process as well as accounts receivable is a customer's credit worthiness. Companies can set up specific rules based on external credit information and a customer's payment history to determine the credit limit. This is all done to mitigate the risk of financial losses for our companies, while optimizing relationships with customers. Let's take a look at updating a customer's credit master data. To do this, we'll enter transaction code BP. In our locator area, we want to find a business partner by the business partner number. We'll enter 54 and press Start. That brings up our business partner, Line Supply, and we'll double click. To update our customer's credit, we need to go into a different business partner role. In our Change in BP role dropdown, we'll look for SAP Credit Management. The Credit Management role evaluates credit worthiness and payment behavior of customers. First, we need to go to the Credit Profile tab and select our roles for this credit profile scoring. We're going to assign this manually, so in the Roles field, we'll choose Standard Role without automatic calculation. We don't have specific roles set up in our test system, so let's assume that we have worked with this customer in the past. They always pay their invoices on time, and we want to extend them a $20,000 credit limit. To do this, we'll click the Credit Segment Data button at the top. First, we need to define the credit segment. In the Credit Segment dropdown, we'll select 0000 Main Credit Segment. This customer does not currently have a credit limit defined. Let's click the Limit Defined radio button. Now, in the limit field, we'll enter $20,000. In the Valid To field, we need to decide when this $20,000 credit limit is valid until. Let's assume it's valid until the end of 2023. We'll choose 12/31/2023. We'll now press Enter so the system can read the information. So we have now entered a credit limit request. This credit is not yet available to this customer. Now, if we did not have access to approved credit limits, we would not have this option to reject or release limits. But because of the way our user role has been set up in our test system, we do have access to release the limits. Let's click the check mark to release the limit to our customer. The screen has now changed to show that this limit of $20,000 is defined and valid until 12/31/23. Let's save our changes. We now see the green check mark in the status bar with a message that our changes have been saved. This customer now has a credit limit of $20,000, and they can order with us up to that amount without requiring additional approval, streamlining the whole process. Maintaining a customer's credit allows sales staff to do their job efficiently and effectively. For many businesses running SAP, the most common order-to-cash process starts with a sales quotation. When the quote is accepted by a customer, it's converted to a sales order. Then, the service is provided, or the product is delivered, and invoices are generated. Let's create an invoice from an existing sales order in SAP. To do this, we'll enter transaction code VF01. The first field we need to decide on in this transaction is billing type. We'll click the drop-down and choose F2 invoice for the billing type. The F2 invoice in SAP is usually used as an order-related invoice. The next field is service rendered. This can be used for when a service is completed or when a product is delivered. The function of this field is to determine when the system will calculate tax. Let's enter today. Next is the billing date field. This is the date the customer is billed and the document is sent to accounting. Again, we'll enter today's date. Next is the pricing date field. The pricing date is important when different currencies are being used and a date needs to be entered to determine the exchange rate. Again, we'll use today's date for the pricing date. Our header is now complete, and we can move down to the Documents to be Processed area. This transaction is really useful because we can create many invoices collectively at one time. In our example, we only need to create one invoice. We'll enter the sales order number in our document line item. We'll enter 800,00011 and press Enter. Because we've entered the sales order number, the system automatically populates the net value of this order, which is $250 US. The system also automatically populates the payer with a number and the name and address. In this case, it's A1 Retail. Finally, we see that the system has populated the line items from the sales order. We have a finished product called Metal Plate for a net value of $250 US. Everything looks good and we're ready to create this invoice. We'll press the Save button. In the status bar, we see the green check mark and a message telling us that the document ending in 05 has been saved. This means we have successfully created an invoice from our sales order, and our customer will be billed for the service we provided them. Sometimes we need to create a billing document without referencing a sales order. These are often called direct invoices in SAP. Why would a company need to create a direct invoice instead of referencing a sales order? There are a few possibilities. Sometimes companies handle their sales outside of SAP. In that case, there wouldn't be a sales order to reference. It's also possible that small orders don't require a sales order and a customer can be billed directly. Let's create a direct invoice now. To do this, we'll enter transaction code FB70. That brings us to the Enter Customer Invoice transaction. We want to create an invoice in the system. Our transaction field is already populated with invoice, so there's nothing to change here. This brings us to our customer field. If we didn't have this number, we could search using the Match Code button. We'll enter customer number 171000001. Next, in the invoice date field, we enter the date the invoice was created. We'll click the Match Code button and choose today. The posting date field is auto-populated with today's date. This is editable, but because we want the invoice to post today, we'll leave it as is. We now press Enter so the system reads the fields we've entered. When we enter the customer number, the customer information was also populated with their name, A1 Retail, and their address and banking information. The next step is to enter the amount this invoice is for. Let's assume that our customer owes us $1,000. We'll enter $1,000 in the amount field and press Enter. Looking at the top right area of the screen, we see the balance field with $1,000 in it. Right next to it, we have a red warning light. When we hover over it, it says balance not equal to 0. The system is warning us that we're invoicing this customer $1,000, but we haven't yet said which general ledger account we want this money to be credited to. To fix this issue, let's go to the first line item. The first field is GL account number. We'll enter account number 12540000 and press Enter. In the short text field, we see the name of this account is Other Receivables NRA. NRA stands for Non-Reconciliation Account. We chose this account because we can't post directly to a reconciliation account. We see the system has defaulted for the GL account to be credited, which is correct. We'll now enter 1,000 in the amount and document currency field and press Enter. Again, looking at the top right area of the screen, we see the balance field, but now the balance is 0. Right next to that, we have a green light. When we hover over it, it says balance equals 0. The system is telling us that this invoice is now correct. We'll now click on the Payment tab. This invoice has also pulled in the payment terms and baseline from this customer's master record. We can see that the payment terms have this invoice due on baseline date November 30th, 2022. Let's assume that we need to change the payment terms to net 60 for this customer. We'll click in the Payment Terms, scroll down, and choose Net 60. Now we'll press Enter. We get a yellow warning message. The system is warning us that the payment terms have in fact changed. With any yellow warning message in SAP, we can press Enter again and the warning will go away. Now, to see our changes, we'll click back to the Basic Data tab. Now we can see that our payment terms and baseline date have changed to 60 days net due from our baseline date of today. We are now ready to post this invoice. We can post it by pressing Post in the status bar. We see in the status bar that our invoice was successfully posted in company code 1710. We have now created a direct invoice in SAP, and this customer will be billed without referencing a sales order. When we think accounts receivable, we often think of receiving the money we are owed for the products and services we provided. In this video, we want to cover exactly that, the process for receiving a manual incoming payment from a customer after they are invoiced. To do this, we'll enter transaction code F-28. We're now in the Post Incoming Payments transaction. First, we need to enter the document date. We'll select Today. The next field is the document type. This is defaulted to code DZ, which stands for Customer Payment. That's exactly what we're trying to do, post an incoming customer payment. Our company code is defaulted to 1710, and currency is defaulted to USD, because that's the company code and the currency we've been working in. The posting date field is auto-populated with today's date. This is editable, but because we want the invoice to post today, we'll leave it as the default. All other fields in the header are optional, so we'll head down to the bank data area. In the account field, we want to put the bank account number. We'll enter 110020000. This is the GL account number for our company's main bank. The amount field below is the amount of the payment that is being made. The customer is paying against their open invoices, so we'll enter 1,260 here. The value date is also required for this posting. We'll again choose today. Let's move down to the Open Item selection area. The account field in this area is looking for the customer account we want to apply this payment to. We'll enter 171000001. This is the business partner number for this customer. The account type field is defaulted to D, and the D here is a code that this is a customer account, which is correct. We're now ready to post this incoming payment, so we'll press Post. We see in the status bar that our document was successfully posted in company code 1710. We have received payment for an outstanding invoice from our customer, and the payment has successfully been applied to their account. As in all areas of SAP Financials, the standard reports in the accounts payable area are very robust. They are used to make AP account inquiries. They can be also used for period-end account analysis and vendor account reporting, amongst other things. Let's look first at the list of vendor line items report. To do this, we'll enter transaction code S_ALR_870-12103. This brings us to the list of vendor line item selection criteria screen. We're going to run this report for one specific vendor, vendor number 173-00001. We'll do this in company code 1710. We want to run this report for all items, and we can see that our All Items radio button has been checked. We can now execute this report. This brings up all our line items for our supplier in this company code. We want to make our report easier to work with, so we'll go to Settings, Columns, Optimize With. All the data in the orange rows is information about this specific supplier, like name and address. We see that this supplier is Top-Notch Supply. Below, we can see the line items for this vendor. The first column, called Assignment, comes from the reference field. If there's a vendor invoice number that was entered in the reference field, then it shows up here. The second column is the posting date, and that's the date that each of these line items were posted on. The fourth and fifth columns are the document number and the document date columns, respectively. Looking across to the FC amount column, this is our amount in US dollars. This column tells us the amount of each line item. Now let's look down at the bottom of the report. When we look at the bottom row of this report, we can see that for this supplier, we have a total balance from all of our invoices of negative $25,078 US. This is only one report in the accounts payable area. To see many of the available AP reports, we'll head back to the SAP Easy Access screen. To do this, we'll press Exit and Exit again. Back at the SAP Easy Access screen, we'll navigate using the menu tree. First, we'll expand the Accounting folder. Next, we'll expand Financial Accounting. Now we'll expand Accounts Payable. The bulk of accounts payable reports are found by expanding the Information System folder, and then the Reports for Accounts Payable Accounting folder. Each one of these folders contains different accounts payable reports. First, we expand Vendor Balances. We see 6 reports related specifically to each of the vendor balances. The Vendor Items folder has 7 reports related to that topic. The Master Data folder has reports directly related to the business partners that have been set up as vendors and suppliers. And finally, the Payment Transaction folder has 4 reports that look at actual payments like cash checks. Out-of-the-box SAP functionality provides a ton of standard finance reports. These report results provide a wide range of insights into your organization's accounts payable data. Accounts receivables departments at many companies are often swamped by customers who want to know how much they owe, when their payments were due, or if a payment they sent was received. That's not to mention upper-level management wanting to know what the company's cash flow situation looks like. There is an abundance of standard SAP accounts receivable reports available to answer all these questions and more. Let's look at one report called the List of Customer Line Items report. To do this, we enter transaction code S_ALR_870121197. This brings us to the selection criteria screen for this report. This report is extremely useful to get a glimpse at the outstanding items owed in receivables at a certain time by customer, or with broader criteria. If we wanted to report by a specific customer or a set of customers, we could enter those in the Customer Account field. In our example, we want to have a look at the entire company code to get a sense of how much we are still owed. So we'll enter 1710 in the company code field. Now we'll scroll down to the line item selection area. We want to run this report for all open items, so we'll leave the All Items radio button checked. We're now ready to run this report, so we'll press Execute. All our information in the orange rows is data about specific customers with their customer number, name, and address. Below, we see the line items for this customer. The second column is the posting date, and that's the date that each of these line items were posted on. We'll now make our report a little easier to read by going to Settings, Columns, Optimize With. The LC Amount column stands for Local Currency Amount, which is US dollars. This column tells us the amount of each line item. Let's scroll down to the bottom line item for this customer. When we look at the bottom row for this customer, we can see that this customer has a 0 balance. They are all paid up on any outstanding invoices. This report is relatively small, so we're going to scroll to the very bottom of the report. The final row of our report is highlighted in yellow. This is the total of all of the line items for the criteria we ran. So, for company code 1710, on today's date, all items open equals 0. That means the accounts payable team is doing a wonderful job in collecting, but it may be time to kick the sales team into high gear. This is only one of the accounts receivable reports that can help us field inquiries from both management and from customers. To see some of the others, we'll head back to the SAP Easy Access screen. We'll press Exit and Exit again. Back at the Easy Access screen, we'll navigate using the menu tree. We'll expand the Accounting folder and the Financial Accounting folder. Next, we expand the Accounts Receivable folder. We'll expand Information System and reports for accounts receivable accounting. The receivables reports are broken down by customer balances, which have great options to see how much individual customers owe in total. Next, the Customer Items folder offers 10 different ways to report on individual customer line items that are either due or that have been paid in the past. Finally, the Master Data folder offers reports to show information specific to the customer's master data, like name, address, and which users made changes to this customer information. As we can see from this list, there are a bunch of standard SAP accounts receivable reports that will show us who owes our company money, how much they owe, and whether they're paying on time. With the power of these reports, we can better understand the payments coming into our companies and keep a close eye on our cash flow situation. Asset accounting is a major subledger in SAP financial accounting. Asset accounting deals with fixed assets which serve the needs of a company's core business functions. In other words, fixed assets are the assets used to help run the business. Examples of fixed assets include real estate, buildings, both finished or under construction, vehicles, machinery, and even intangible assets like goodwill and copyrights. Fixed assets are depreciable and are reported on the balance sheet. Let's take a look at the asset accounting process in SAP S/4HANA. The asset lifecycle covers what commonly happens to fixed assets at a company from the purchase all the way to retiring the asset. This is commonly called the acquire to retire process. This process starts by acquiring an asset. Fixed assets can be acquired externally with a purchase from a vendor. Assets can also be acquired internally through construction. Next, like all processes in SAP, we have to create our master data. In this process, we create our asset master record. At this step, an asset is placed into an asset class, which is used to categorize assets. Examples of different classes are land, buildings, computer software, assets under construction, and many more. Asset classes are extremely important because the class determines the general ledger account where asset transactions are posted. They also determine the asset's useful life from an accounting standpoint. Next, we have asset maintenance. Many types of assets need routine maintenance or repairs from time to time. An example of asset maintenance would be an oil change or new tires on a company vehicle. Routine maintenance or relatively small repairs are considered expenses. The next step is an asset transfer. Asset transfer happens only occasionally when the purpose of an asset changes and we can move an asset from one company code to another within SAP. The fifth step is asset depreciation. The cost of using an asset, considered the consumption of an asset, is called depreciation. Depreciation is accounted for at the end of each accounting period. Each type of asset depreciates differently, and there are different depreciation rules depending on the country our company is operating in. In SAP, all of this information is kept in a chart of depreciation. Assets can be depreciated automatically at a periodic interval or manually on a one-off basis. The final step in the life of an asset is asset retirement. Retirement is the removal of an asset from the asset portfolio, and it can be done in a few different ways. An asset can be at the end of its useful life, and it can be scrapped with no revenue being earned. An asset can also be retired via a sale where revenue is earned. It can either be sold and posted to a customer or posted against a clearing account. The value of an asset from the date of acquisition to its final retirement are updated in SAP. A major purpose of asset accounting is to see the exact values of fixed assets owned at a particular time And thanks to standard SAP reporting, this can be done anywhere in the asset lifecycle. From the buildings that house the offices and warehouses to the heavy-duty machinery that actually produce the goods that companies sell, fixed assets are integral to running most businesses successfully. Asset accounting in SAP enables us to acquire, manage, and value the fixed assets at our organization effectively and accurately. The asset lifecycle, like all parts of SAP, relies on strong master data. The asset master record is where we enter all the static attributes of a fixed asset in the system. We create asset master records anytime we acquire a new fixed asset. In our example, we'll assume our company just bought a new vehicle, and we need to create the asset master record. To do this, we'll enter transaction code AS01. This brings us to the Create Asset initial screen. The first field we want to enter is the Asset Class field. We'll press the Match Code button, and we'll search for all asset classes in company code 1710. Our results show 30 different asset classes for this company code, everything from real estate and buildings to goodwill and other intangible assets. We want to create an asset master record for a new van, so we'll double-click 3100 Vehicles. Because we've been working in company code 1710, the system auto-populates it for us here. The Number of Similar Assets field is useful when we are creating more than one record at a time. For example, if we had purchased a fleet of 10 vans, we could put 10 in this field and create 10 similar records at once. In our example, we only want to create one master record, so we'll leave the number at 1. The reference area below is useful when we're creating an asset master record that is similar to an asset that already exists in our system. By adding the reference asset number, general information will auto-populate in the following screens. We are not creating an asset with reference, so we'll click the Master Data button to continue. In the description field, we'll enter the information for this asset. Let's assume we purchased a 2023 Mercedes Sprinter delivery van. We'll enter that here. The account determination field has been auto-populated with 160040 vehicles. This information has come in because of the asset class we chose on the previous screen. The serial number field is optional. In our example, we could add the vehicle identification number, or VIN, if we had it. The inventory number field is also optional, and it's usually used for internal inventory purposes. Now let's click on the Time Dependent tab. The only required field on this tab is the Cost Center. The Cost Center determines where this asset adds to costs and indirectly adds to the profit of the company. We'll click the Match Code button to see the available cost centers. Again, we'll search by company code 1710 and press Start Search. Let's assume the van we purchased will be used to travel to trade shows for marketing purposes. We'll double-click on the cost center associated with marketing. Next, let's click on the Origin tab. This tab has all the information regarding where this asset was acquired from. If we purchased this from a vendor that exists in our system, we could search in the vendor field. This information is not required, so we'll leave it blank. In the manufacturer field, we'll enter Mercedes, and we'll click the checkbox that the asset was purchased new. Next, we'll click the Depreciation Areas tab. The values in this Depreciation Areas table have been automatically updated by master data settings for the asset class we chose on the first screen of this transaction, which was vehicles. Each depreciation area is used to calculate a type of depreciation. Two examples would be financial depreciation or depreciation for tax purposes. The depreciation area shows the value of asset for specific needs, and values may be different for each depreciation area. Looking at the first depreciation area, it's marked as 01 for book depreciation, which is the amount of depreciation expense calculated for our organization's financial statements. Creating accurate asset master records are the key first step once we acquire a new asset. This enables our understanding of the value of all of our fixed assets. Now, let's look at external asset acquisition through a purchase from a vendor. Purchasing a fixed asset from a vendor is a common transaction for almost every business. When we purchase the asset, we would set up the asset master record. Then we would use this transaction to debit the asset and credit the vendor account. This would capitalize the asset value and produce an accounts payable invoice. For our example, let's capitalize the Mercedes Sprinter van our company recently purchased. To initiate this process, we enter transaction code F-90. This brings us to our acquisition from purchase with a vendor header data screen. In the document date screen, we'll enter today's date. The type field is defaulted to KR, which is the code for vendor invoice. We've purchased this asset from a vendor, so we'll leave this code as is. We're working in company code 1710, and our currency rate is in US dollars, so we'll leave both these fields as is. Our posting date is also defaulted as today. We want this document to post today, so we'll leave this date entered. Now, in the reference field, there is no red asterisk, but this field is required. It's a free-form field, so we'll enter the invoice number from the vendor. In our example, we'll use Purchase 22. We'll now scroll down to the first line item. In the first line item area, we have 31 defaulted in the posting key field. This is the posting key for invoice, and that's correct. In the account field, we need to enter the vendor number. We'll enter 173-00001. Now we'll press Enter. And we're taken to the Enter Vendor Invoice Add Vendor Item screen. In the amount field, we enter the price we paid for our asset, which in this case was $70,000. Now we'll click the checkbox next to Calculate Tax, so the system will automatically calculate the tax on this item. The Payment Terms field is also auto-populated based on this vendor's master data. Moving down to the next line item area, in the Posting Key field, we'll press the Match Code button to look at available posting keys. In the last item, we were paying an invoice, so in this line item, we want to debit an asset. We'll scroll down and choose 70 for debit asset. Now in the account field, we want to enter the asset number that we want debited. In this case, it's the 2023 Mercedes Sprinter. So we'll search and click 2023 Mercedes Sprinter delivery van. Moving over to the transaction type field, we'll press the Match Code button to see our available transaction types. The first option, 100 for external asset acquisition, is exactly what we want, so we'll double-click that line. Now we'll press Enter. This time we're taken to the Add Asset Item Detail screen. In the Amount field, this amount needs to balance with what we paid in the invoice, so we'll again enter $70,000. Next, we need to enter the tax code. We'll press the Match Code button, and we'll choose AP, Sales Tax Exempt. In the Tax Jurisdiction field, we'll search and choose CA for California. We're now ready to post this invoice, so we'll press the Post button. We now receive the success message saying that the document has been posted to company code 1710. We have now capitalized this Sprinter van with a value of $70,000 and created an open accounts payable invoice for the $70,000 as well. In the acquire to retire business process, capitalizing a fixed asset that was purchased from a vendor is a key step to begin utilization of the asset in our business. Depreciation of an asset refers to the value of the asset decreasing or allocating the cost of the asset to the financial periods where the asset is being used. Depreciation amounts are posted for every asset master record to calculate the net book value. These depreciations happen simultaneously based on the asset's depreciation area. This en masse depreciation usually occurs at the end of every financial period. In this example, we want to look at how to post unplanned depreciation. Unplanned depreciation can be used when an asset becomes obsolete or an asset depreciates faster than intended. An example of this would be if one of our company vehicles got into an accident. To do this in the system, let's enter transaction code ABAA. We get a Create General Header Data for Posting pop-up. In the company code, we'll enter 1710. Next, we'll enter the vehicle's asset number, which we'd like to depreciate because of the accident. We'll enter 500,000,004. In the transaction type field, we'll click the Match Code button. We want to make an unplanned depreciation on a current year acquisition. So we'll double-click option 650. And we'll click Continue. In the area selection, we have the accounting principle and depreciation area fields. By leaving these fields blank, we'll have this unplanned depreciation apply to all accounting principles and depreciation areas for this asset. Next, we'll enter our document date. We'll use today's date. For our posting date, this is the date that this will post. We'll also use today's date. Finally, we'll also add today's date for asset value date. Let's assume this vehicle was in an accident and lost $10,000 in value. So we'll enter 10,000 in the amount posted field. In the text field, we can enter any notes about this depreciation. We'll enter vehicle accident, loss of value. That's all of our required information. We're ready to post our unplanned depreciation by pressing the Post button. We're presented with a pop-up with two messages. The green lights signify a successful posting. We have posted successfully unplanned asset depreciation to depreciation areas under both accounting principles that are in use. Again, asset depreciations usually happen all at once at the end of a financial period based on the asset's depreciation area. In the real world, however, we sometimes need to post unplanned depreciation when an asset loses value abruptly. Asset retirement in SAP means to remove the asset from our portfolio. We retire assets when they're no longer useful to our business. There can be many reasons for an asset to no longer be useful. With technology improving rapidly, machinery and software can become economically obsolete. Sometimes business models change and equipment is just not needed any longer. Or sometimes a machine will reach the end of its life where it becomes more economical to replace it than it is to fix it. At any of these points, we want to retire the asset. And there are a few ways to retire an asset in SAP. First, the asset can be sold to a customer and revenue can be generated. In our example, we're interested in retiring an asset by scrapping. When we scrap an asset, there is no revenue associated with a retirement. To retire an asset by scrapping, we'll enter transaction code ABAVN. We've been working in company code 1710, so this is auto-populated for us. Next, we need to enter the asset number that we want to retire. We'll enter 600,000,000 for a MacBook that's no longer working. In the Area Selection portion of the screen, we want to retire this asset for all accounting principles and depreciation areas, so we will leave these fields blank. In the Basic Data area, we need to enter the dates for document date, posting date, and asset value date. We'll enter today's date for each of these. Now we'll go to the Note tab to explain why we're scrapping our MacBook. We'll write, hardware issue, machine could not be fixed. So we're ready to retire our asset by scrapping. We'll now click the Post button. So we're presented with a pop-up with two messages. The green lights signify a successful posting. Our asset has been scrapped and recorded by both accounting principles that are in use. This fixed asset has reached the end of its useful life, and by retiring it, we have successfully removed it from our asset portfolio. And because we retired the asset by scrapping, instead of selling it off, there's no revenue recognized by our company. Retiring assets is the final step in the acquire to retire asset lifecycle. SAP has many tools and reports for asset accounting. One extremely useful tool that delivers quick insights into individual assets is called the Asset Explorer. The Asset Explorer is an asset manager's best friend because from one place we can see every single transaction associated with a single fixed asset. Let's look at this interactive report by entering transaction code AW01N. The first required field is company code. We'll enter company code 1710. Next, we'll enter our asset number. We'll enter 500-00004. Next, we're going to look to the future. In our fiscal year, we'll click to 2024. The system has populated a ton of information on this screen. In the top left area of the screen, we have a menu tree for this asset's depreciation areas. In our example, we have 4 different depreciation areas. And by clicking on each of these different depreciation areas, we have the depreciation values populated. We can see that 01 book depreciation area is selected. So when we start looking at planned and posted values, it will be for this depreciation area. On the bottom left area of the screen, we have the objects related to asset menu tree. In our example, this contains the vendor we purchased this asset from, the asset's cost center, the GL account for this asset, and the profit center for this asset. By double-clicking on any of these objects, we could be taken into that object where we could drill down for more information about each. So in the plan values area of the screen, we see the APC transactions line item. This stands for acquisition and production costs. The APC and acquisition value for this asset was $70,000, and the ordinary depreciation was $16,334. There is also an unplanned depreciation of $10,000. Our net book value equals the acquisition cost minus the ordinary and unplanned depreciation, which equals $43,666. So in 2024, we can assume that the net book value at the start of the year will be $43,666, assuming there are not any more unplanned depreciations. While we've been looking through our planned values, the posted values would show the actual posted values for this asset. Now we'll click on the Comparisons tab. We can see the planned book depreciations from 2024 to 2027, including our $10,000 unplanned depreciation that occurred in 2022. As we can see, the Asset Explorer is a great one-stop shop to see all the transactions against a single fixed asset. This is only one of the asset accounting reports available. To see many others, we'll head back to the SAP Easy Access screen. To do this, we'll press Exit. Back at the SAP Easy Access screen, we'll navigate using the menu tree. We'll expand the Accounting folder and Financial Accounting. Next, we expand Fixed Assets. Now we'll expand Information System and Reports on Asset Accounting. We have 12 different folders here, each with different reports. For an example, let's expand Asset Balances and Asset Lists, and then Asset Balances again. We can see that we can run reports for account balance by each of these 8 criteria. Fixed assets are essential at most businesses, and there are standard SAP reports to view insights at every stage of the asset lifecycle, all the way from acquiring to retiring the asset.